Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from optionpit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Grigas from Options Express.
Welcome back to the Option Block, and I hope all of our listeners out there had a great weekend. My name is Mark Longo, and I am your host for this joyous romp through the world of options. And I am joined, as usual, by our silly cast of characters, starting off with the Espresso newsletter author himself, Mr. K from Options Express, Rob Kurzakowski. Rob, how are you doing this fine Monday afternoon?
I'm doing great, Mark. How are you?
I'm doing good. We're pretty busy over here, so that's always a good thing. I noticed that Options Express put out the release today for the Broker of the Year Award winner, so I'll have to make sure we have that up on our site and our listeners can go out and see that. I also realize now that I forgot to plug the show I did with your CEO last week, David Fisher. He came on and we had a nice long chat about what our criteria our readers use to evaluate the different brokerage firms and why we think they picked Options Express and what reasons they cited for us, as well as some other interesting topics as well. We discussed in detail about the Optionetics deal, about some of the comments he's made in the past about OX being on the block, and so he talked about that a little bit, and a lot of interesting things. We also drilled down to the special dividend a little bit. So a lot of the topics that our listeners, I know, are pretty interested in. If you're interested in listening to that, you should have access to that already if you're listening through iTunes and our Options Insider radio feed. If not, just surf on over to theoptionsinsider.com, click on the radio tab at the top of the page, and you'll see it right there, special edition of Options Insider Radio with David Fisher from Options Express. And we are also joined today, as always, it wouldn't be a show without him, Uncle Mike Tusaw, the man from the mountains himself, also known as the man from Know Your Options, Inc. Uncle Mike, how are you doing this fine Monday afternoon?
Excited to be here as always.
I can just tell your voice is dripping with enthusiasm.
How couldn't it be in markets like this?
That's true. A lot of chop, a lot of froth going on these days, which is good for the options folk. I also want to mention, too, to our listeners that we do have that landing page over at Options Express. So if you are considering Options Express, or if all of our talk about it on this show over the past few months has made you intrigued and you want to try it out, then we can give you some free trades for going over there. Just surf on over to optionsexpress.com/OXradio and try it out for free. See if you like it. See if everything we've been talking about is up to snuff, up to par, up to your level. I also want to encourage our listeners to keep sending in their submissions for questions, comments, whether it's via the forum at theoptionsinsider.com. You could hit us up on Twitter. You can reach us at twitter.com/options. And then, hey, I know you have the OX Social, Rob. Do you guys have a Twitter handle as well?
Actually, there's two. There's options, or twitter.com/optionsexpress. And, of course, there's no E before Express. And our international site, which kind of mirrors what we do on the main or the main one, is twitter.com/OX International.
Yeah, we got on Twitter so early that we were able to snag options, and we get inquiries on a regular basis for how do we get that and how can we buy that from you. So yeah, that was if we had known at the time what Twitter would become, we would have land grabbed everything. But we got a fairly good handle as it is, so you can hit us up on that. You can also follow the show on Twitter at twitter.com/optionblock. We will post links to the new episodes there, as well as some other pithy comments from the host. So you can reach us on DM via Twitter. And, of course, the good old voicemail to dial us up, 312-544-9356. If your question is pithy and interesting, we may just play it on the air, and you will be immortalized for all your friends and neighbors. All right, and with that, we will roll right into the trading block.
The trading block.
And welcome to the Trading Block. This is the section of the show where we discuss what's catching our eye from a broad perspective, as well as some of the individual names that are catching our attention today. And it was a relatively strong day on the street today. S&P up about 7 handles, a little over 7 handles. NASDAQ up about a point. Dow up almost 100 points today, and the VIX down nearly a point. The VIX cash, that is. And there was a lot of news going on today. A lot of developments seem to be driving the market. Of course, we have the continued saga that is Libya these days, and what is going on with Gaddafi, and what's going on with his regime, and what's going on with the protesters there. And that seems to be the major catalyst that sparks us up and down. And what else were you guys watching today? What caught your eye, either a broad or an individual perspective?
Well, a couple of things. First one, like we were talking a little bit before the show, Apple's coming up again a little bit. The market itself, S&P, was up about 0.6 on the day. Apple's up about 1.5%. So Apple's starting to come back a little bit. I think that, I guess maybe I'm the ultimate, I guess I may be an over bullish Apple person, but I can get away with it because I'm collared. With that, I think that with what we had on the pullback, I think it was a buying opportunity, quite frankly. Some other things, Ford started to come back. It wasn't today so much. They were actually flat on the day today, but they were actually up 2% this past Friday. And full disclosure, we are long Ford. And so there's a lot going on today for sure. And just like anything, like you were saying, we're definitely watching what's going on in Libya. Silver, gold, I'll let Rob talk a little bit more on the commodity front, but we're definitely watching what's going on over there, and we do have positions in silver and gold. And the other thing that we're watching, our energy stocks, they're doing pretty well. It's not because we're geniuses or anything. It's just because of what's going on over in the Middle East. So definitely some things going on today, and if this market doesn't keep you awake, then there's some days that I've literally fallen asleep looking at the markets and just kind of woken up right away, just because I'm in an uncomfortable position on purpose as I watch the markets during the day. But today wasn't one of those days.
I once had a friend that his name was Ford, and I said, "Oh yeah?" I said, why Ford?" And I said, "Is that because your parents named you after where you were conceived?" And then he said, "Well, no, my father's name was Ford, and my father's father's name was Ford." I said, "Oh, your grandpa was conceived in a Ford."
And in case listeners couldn't tell, we have been joined by the greasy meatball himself, Mark Sebastian, elevating the level of discourse as always. Mr. Sebastian, how are you doing today?
I'm doing great. How are you, Mark? I apologize for my tardiness. I was stuck eating some Greek chicken kebab that tasted delicious, I have to admit. So
there are worse things to be stuck doing, I guess, than eating chicken kebabs.
Agreed. That Leo's Coney Island downtown is pretty darn good, I have to admit. So
we live so close to Greektown, we just head over to Greektown now whenever we get the urge. Whenever we get the urge for either gyros or hummus or kofte kebab or anything fun like that. Or saganaki, my favorite.
That saganaki was invented in Chicago, apparently.
Really?
The flaming cheese was invented in Chicago, yes.
Yeah, of course, if they don't deliver it with the right upa, it kind of loses the whole value. If they kind of just come to your plate and light it on fire and walk away, it hurts the flavor of the dish, I feel.
I concur.
Uncle Mike was just talking about Apple, and I believe I did bring it up either last week or I think earlier last week or maybe the last show we did last week, where, the endless stream of bad news coming out of Apple, the endless stream of bad publicity and bad pictures of Steve Jobs limping out of the cancer section. I kind of posited, I think on that last show, I was like, how likely is it that this firm who manages their PR and manages their earnings and everything else so well are going to take some action and push up their announcement of the iPad 2 to counteract some of this PR. And sure enough, what happened, I think earlier this week, or I think it was last week, they announced the actual date of, I think it was March 2nd, so it's coming up this week.
Yeah,
And,
it's pretty interesting. You could just tell that something like that was going to happen. They're good. There's been all kinds of, Apple's been all over the board crazy the way it's been trading.
But, between managing the release of his illness and his departure to moving the earnings announcement to adjust that, to plan for that, so to moving their different announcements, they have a lot in the pipeline that they could use to stem and offset some bad news. And that seems to be what they're doing to Uncle Mike's and his clients' benefit, no doubt.
Yeah, and
that's nice of them.
Yeah, and it also doesn't hurt when one of their major competitors releases a product that's very similar, that's supposed to be a quote-unquote iPad killer, that happens to be cost $300 more. So with the Motorola Zoom, it's a really nice product, and personally being an Android guy, I'd love to get it, and the fact that it's unlockable and hackable and all that is great. But $300 is, that's a good chunk of change to be spending for something that could be obsolete just months down the road.
Yeah, I have to admit I was looking forward to that one, too. I would like a tablet, but something a little bit more business-oriented I could take on trips and use as a mini laptop replacement for a lot of the things I need to do, and the Apple iPad doesn't cut it for that. So I was hoping the Zoom would be the one, and it doesn't appear to be. It seems to have shipped with a laundry list of issues and features. You actually have to send it back to them after a few months so they can upgrade it for you.
That's crazy.
Which is nuts. I can't imagine shipping a product and then having the consumer has to ship it back to you within 90 days for a hardware upgrade. That's insane.
That's ridiculous.
But it is kind of cool because it's bucked the trend of Motorola products that have been locked in inaccessible for hackers and people like to tinker around with, which is a huge part of the Android consumer base. And this one's actually unlocked, which a lot of people liked, and I think they already have it overclocked to 1.5 gigahertz, and people have already done all types of crazy stuff with it.
Rob, you're hip to your Gizmodo and your Engadget there. I like it, sir.
I personally don't buy a product that I can't hack, so it kind of keeps me occupied. And my wife would kill me if I soup up the car now, so it's still under warranty. So that's pretty much as far as I can go is hacking my electronics.
Yeah, I think there's a strong Android user base out there that likes to do that kind of stuff. Of course, whether that will threaten Apple's death grip on the mainstream, I have no idea.
See, I think it does. The thing about it is, the more, what I've heard from a lot of business people is that the iPad is great for document management, but it is not the end-all, be-all of the PC that everybody keeps claiming it's going to be. And anybody that thinks it's that is insane. But even with that, I thought that, I feel like Apple's actually finally kind of fairly priced. I would be shocked if we get the same kind of up motion that Apple's been getting. I don't know. What do you guys think? Can this really go that much higher? I think we're about done.
Them fighting words for Uncle Mike. He says he had a strong buying opportunity here. He thinks I think his words were exactly, it will hit 500 within 2 weeks. Is that not what you said, Uncle Mike?
No. At least 3 weeks. Come on now. No,
yeah.
Let's make it crazy.
No, but do you think this is a fall sale here, Mike? What do you think?
With Apple as the stock itself, we still there's no competitors internationally right now, and Apple is still in a spot to where they have a lot of international exposure. They have their foundations laid overseas in ways with which other people do not. So I think that's where the upside of Apple is going to continue to grow, and the combination of that, and if the dollar does sink, which, quite frankly, I'm not a dollar bull by any means, I think those are two very big things with which Apple has in its favor right now. Eventually, yes, someone is going to take down the giants. The champ will be dethroned at some point, but for now, there's still, when you have, the iPad killer, as Rob was putting it, at $300 greater, then that's still an area to where Apple still dominates right now.
Mm-hmm.
Mm-hmm.
And Rob, we didn't get a chance for you to give us your commodity rundown. How is it looking on the commodity front today?
Well, we've kind of had a mixed day again in oil. It's been the trend recently when oil starts rallying on the Libyan news. As soon as it really starts to kind of move intraday, the Saudis come out and say, well, we'll give you more oil. So a very mixed, choppy day in crude. Gold is starting to kind of consolidate here above the $1,400 level. It hasn't been as strong as the rally in silver lately, but I think it's far more sustainable. You see all these kind of factors lining up. You have the Middle East in turmoil. The currency markets have been in flux, and no major currency has really found a direction of late. And you have the consumer spending numbers from today that were kind of off. We had really good retail sales numbers early in the month, and that got a lot of people excited that the consumer is finally spending again. But now you're seeing that the high price of fuel and high price of some of the other commodities is starting to cause consumers to kind of hold on to those pocketbooks a little bit tighter. So it has quite a few factors lining up for it. We're at a area where on the chart it looks like we can certainly break out and take out recent highs and possibly push into the 1470 to 1480 level. But if we start seeing some stability in some of those factors, we see a smooth transition in Libya, although that looks really unlikely at this point. And you start seeing maybe some flocking of investors to the dollar if the economic conditions do start to falter a bit. I think that could take some steam out of the gold market. I actually like being long a kind of a ratio spread, long gold, short silver, just because silver is much more economically sensitive than gold is. I think we can, if we do see prices come back, I think silver is going to be the one that's going to fall to a much greater degree because of the industrial use and some of the economic concern, unless we start seeing some really positive numbers coming out of China to kind of slow that down, or some positive GDP numbers to kind of take some of the economic concerns away for traders. But I have a tough time seeing silver rally very far beyond this level, and I do like gold at this point, at least in the intermediate term.
One of the things with silver, have you looked at the crazy front month skew in for March and April in silver? It's actually even SLV has a kind of standard commodity skew to it at this point, which means people are really, really bidding up that upside. There's a ton of buying on that upside. Right now, you've got the 35, 36 calls trading at 4 or 5%, like a 3% higher volatility than the at the monies. The way they're bidding up calls in the near term suggests we might get a little bit more of a strong rally. But then if you look at some of the far term stuff, call skew is really flat, while put skew has kind of a real big downside. So it's interesting. There's almost like they're almost begging you to do kind of the time collar, where you buy the long term put and then sell short term calls against it. It's really crazy.
It's interesting on the long-term stuff, because you'd expect, the long-term type of thing to have the traditional commodity skew of, loading to the upside and, not the inverse of the equity skew, essentially.
Yeah.
And just to see that it's not that way is kind of interesting.
Yeah, but then the front month to be crazy high is really, really interesting.
Well, can't blame him. This thing's been moving like mad. It's gone from 26 to 33 now over the past few weeks. Again, Tucson, 26 puts, I told you.
We cowered down. We got back in a lesser position.
Yeah, I like buying what do you think about buying the put, buying the stock, selling these calls against it while they're so juicy. Especially with the puts. I mean, I can buy the 31 puts at a 34.5 vol and sell in January 2012, and I can sell the front month, April, at 38, the April 36 calls at 38 vol. That's not a bad sale at all. I mean, It only takes a couple of call sales to pay for the 31 puts. I mean, about 4 of them. So in 4 months, you can pay for 8 months of protection. That's a nice little trade there.
Yeah, that's one thing. And what we've been doing too, it amazes me how every time I do a trade like this, you note these skews all the time. It cracks me up. What we're doing right now in silver with SLV, we actually went to April this month for the protection side of it. And typically the method with which we'll use is we'll go like 1 to 3 months out, look at every possible collar combination that I can possibly think of. And what we did, we actually were long the 32 put. And we're kind of diagonaling it from the standpoint of we're actually going with the weeklies. And we went short the 34 weekly on silver. We got a pretty decent fill on it. Yeah, it's not quite the same juice with that, but we believe that with what we have going on in silver right now, if we actually go to the 34 level, because we were kind of legging in a little bit too, if we can actually stretch it out to the 34 level by this Friday, I'm going to be ecstatic on something like that. And then if that's the case, then let's say that we do go up in silver. Let's say silver does go higher, and let's say that volatility increases. Then we have the backup plan to where we can roll from, say, the 34 weekly. Let's say it jumps to 34 tomorrow. We'll have the backup plan to where we can roll to perhaps a 35 monthly or a 35 or 36 April call or something along those lines. So I'm with you on that totally. That is a very
interestingly,
right now.
The 34 calls have a better bid in April than they do in March, in terms of volatility. Really interesting. But I like the weekly sale a lot. That is some juice right there. 42% volatility. Sold. I love it. I love it.
It's one of the things to where it's just under 1% for a week on something that's $1 out of the money.
That's insane. That is awesome. I love it. Mike Tractor Trailer Tucson. What do you think about that? That's a new one. Mike Tractor Trailer Tucson. I like that. So
I always wanted to be a truck driver. Well, not really.
Well, I don't think you need the. I think you could replace the tractor trailer. That's my theory.
We'll get her done. Crank up that diesel. There's an outtake for you.
Oh, wow. Where do we go from there, I wonder? But, yeah, I think that's probably going to do it for the old trading block. And with that, we're going to roll right into the odd block.
The odd block.
And welcome to the old odd block. This is the section of the show where we sit back and critique Uncle Mike's wardrobe because it is indeed quite odd. No, this is the portion of the show where we sit back and we analyze and we parse and we dive into and we tear apart some of the interesting and or unusual options activity that was lighting up the tape today. And we're going to kick things off with good old Staples Inc. So yes, the ticker on that one is SPLS. It closed at $21.30, up 36 cents or nearly 2% today. This is usually a relatively slight name. They do about 1,800 contracts a day. They have earnings coming up on Wednesday, so they're seeing a bit of a boost in volume today. Today they put up nearly 24,000 contracts, 9.2 to 1 call to put ratio on this one. So
wow.
The calls are, as our write-up on the site says about this, the calls are flying off the shelves in Staples these days ahead of earnings. They're before the open on Wednesday, and the bulls are just out in force in March and April. And, of course, there is a little bit of put buying. We saw about 1,200 of the March 21 puts getting picked up for about 55 cents. That seems to be the outlier to the rest of the activity. We saw about a massive bullish bet, about 9,000 of the March 22s were picked up for 40 cents each. This one looks like it was tied to stock because they did about 270,000 shares, went up about the same time at $21.11. So that works out to a 30 delta for those of you playing the home game. And so this is an interesting trade. We talked a lot about delta neutral before. Putting on a delta neutral trade like this ahead of earnings, interesting way to do it because it does give you a little bit more maneuverability, adaptability, or cushion, if you like, if the earnings don't go your way and these calls don't work out in the near term. That short leg of stock will offset some of that pain. On the end of the day, we saw a total of nearly 15,000 of the March 22s going up today versus an open interest of just 1,500 yesterday. So a lot of opening call paper coming in. We also saw optimists looking at the April 22s as well, picking up about 2,000 of those, 55 cents piece. So there you go. You got pick'ems on the April 22s or the March 21 puts, both of them 55 cents. You can pick which way you want to go there. Sebastian's favorite pick'em type trades.
Oh, yeah. I always, I'm usually, I don't know about you, but I usually lean toward the longer term. Especially
when I'm buying premium, oh yeah, definitely. Unless I really want to play in earnings like in like 2 days or something like that. Yeah, I very rarely am going putting on long premium positions in the weeklies or in immediate front month around earnings.
Right, exactly. So, yeah, I mean it's real, some real interesting volume, but yeah, they've got their earnings coming up on the 2nd, which is this week, and Staples is one of those companies that should do better with, definitely should do better with an increase in, business with things doing better, especially as small businesses get built up. I mean, your Procter & Gamble isn't a big, huge Staples customer, but all of your smaller and intermediate companies are buying a lot of supplies from Staples, and as small business gets kind of built up, that's going to be really good for Staples. So, this, there could be good reasons for bullish paper.
Oh, go ahead, Mike. Go ahead.
Oh, what I like on this one, just looking at like what you're saying, the April 22 call and the March 22 call, by doing that, you can do that calendar spread for, if you get a good fill, about 20 cents. So if you're bullish on Staples, and full disclosure, I know nothing about Staples. I don't even know how to staple my own paper, quite honestly. But if you're bullish on the stock going into earnings, that might not be a bad idea, just because of the fact that you'll have a lot of juice in it, so to speak. So if the vol drops after earnings, and even if it goes up above the 22 level a little bit, you still have some leeway with which you can adjust into something else, or you can do it. So with the amount of risk that's involved with that calendar spread, that's something that's definitely looking tempting.
Nice short gamma ahead of the earnings. Yeah.
That spread for 20 cents bullish is actually sets up really nicely, actually. I think that's actually a really decent spread. In fact, you could even put on, if you were so inclined, put on the double for actually a little more expensive. That line in particular, those 22s are kind of overinflated relative to the 21s. If you were really bullish, the 21-22 call spread is a steal. If you're able to, if I can buy the 21 calls for a 36 vol and sell the 22s at a 37 and a quarter vol, that's something I'd want to do all day, every day, even if I wasn't bullish the stock, with it 30 cents in the money. I mean, I'm buying a spread, 30 cents in the money, the 22-21, and I'm paying 10 cents over parity. Done and done. That's my kind of trade.
Yeah, it looks like you can get that for about 40 cents if you work it pretty good.
Mm-hmm. Which I'm known to do. I'm known to work it pretty good.
Wasn't that your nickname on the floor, the working girl? Mark the working girl, Sebastian?
Yeah, it was Mark the greasy meatball, working it good, Sebastian.
Well, see, we don't have to work it good because of the fact that we have OXX spreads.
Ah, I like it.
a fine plug there, sir.
Nice. I like that. That was quality.
Well, and I think it's good because that's an area from the state, because we use Brokers Express, which uses Options Express execution, and it's situations like that we benefit from almost every time not that we always get a better fill, but the fact that we have the tool of the execution that exists through OX that we frequently use, or that we always use for all of our trades. That's something that's always going through our head, and that's just a huge benefit for us when we're executing trades.
Well, when you got guys like Krasakowski, in your corner. What else could you ask for?
Yeah, unfortunately, I can't brag about that. That's actually the execution desk that sits behind me. Any type of more complex orders, those guys do a great job working orders manually, filling cross exchange. I know the guys know X trading as well, getting fill improvements for clients, and you'll actually see those on the order status page with a little dollar sign next to that when we're able to get a better fill, whether it's a spread or an outright trade. But that's one of the things we keep on working on is not only do we have the smart router to route to the best exchange, but sometimes even the best computers can't solve a problem that a human can, and when we will kind of go the extra mile and make sure that any type of complex strategy gets looked at by a set of eyes and tries to get the best execution possible for that trade.
And then next up on the old odd block, we have Marvell Technology Group, and they are MRVL. Listeners may remember we've discussed them on the show before. It was episode 26, I believe, where back in January we discussed some sizable vertical call spreaders coming into Marvell in the February expiration month. Those obviously have since expired, but I believe they were the 21-23 call spread was going up for some decent size back in January. And today we're actually seeing more spreaders, a different way. These are some bear put spreads going up in Marvell today. They also have earnings coming out later this week, so an interesting week for earnings. And at least one guy thinks that the earnings are not going to be substantial. They report after the close on Thursday. This trader came in and picked up. Well, before we even do that, Marvell closed at $18.28, down 64 cents on the day. This is the name that does about 20,000 contracts a day recently, so that's some fairly high volume from Marvell. I imagine a lot of that ADV is juiced by the approach of earnings. But today they did over 36,000, and one of the more sizable trades we saw go up in Marvell was the April 16 put spread went up 3,500 times for a net premium of 54 cents. So this guy expects, or he needs Marvell to drop another about 5% for this trade to break even. And it looks like that was probably the largest single individual trade. Overall, premium was actually a very unusual slight put to call ratio on this one on the day, but it's pretty much 1-to-1, so the paper was relatively split down the middle. And in terms of any sort of other real spreading activity or any sort of other directional activity we saw in Marvell, this put spread kind of stuck out as the biggest one. Any of you guys, since we talked about it last time, have any of you guys started watching Marvell or playing around in Marvell? The vol, I didn't understand why you'd buy it. The vol is actually relatively inexpensive ahead of an earnings. Think about this. The last time Marvell was leading into an earnings announcement, the vol got up to about 45%, still sitting right around 40%. So there's plenty of time for, I think the vol could go higher. This could be a straight vol bet, but that said, stock's down. We're kind of sitting on highs. All the semiconductors are up. It's real interesting. They got earnings coming up later in the week. I don't know. It's just when I see kind of unusually low vol ahead of an earnings, for some reason I like to buy puts. I get this weird feeling when I see something like that. And maybe this guy's doing the same thing. I don't know. You guys ever had anything where for some reason it seems like when vol's really, really low ahead of earnings, that's when things surprise to the downside? Have you guys ever kind of seen that? That you never get the huge upside bash on a low vol earnings? I don't know. Is that just me?
Fall of 2008 when the market?
Yes, that was certainly a rough patch. There was a period of time where for some reason many were fearful for the market. I do recall that. No, but I don't know. Do you guys? This is just me anecdotally speaking, but when a stock really surprises the upside, I always feel like there's some big players coming in and running up the vol on the upside. But a lot of times when you get the total shock tanking, you see like zero paper ahead of that announcement, or is that just me? Like I'm thinking about like Johnson. Yeah, I'm sorry, Mike.
Yeah, it's not just I definitely that's something to where, there's the surprises in the marketplace. Yeah, without a doubt. Amen, brother.
Yeah, that's kind of implied, no pun intended, in the vol level there. Where if the vol level is low, you're not seeing the massive influx of premium buyers ahead of something they expect is going to move. So
right.
You're not. I mean, so if you see the vol level low, people aren't prepared for that sort of thing unless you have one of those odd scenarios where everyone's hitting all the near ATM strikes ahead of earnings. That's possible, I suppose. But I think in the bulk of those scenarios, that's why you get those crazy movements afterwards, because no one was anticipating those things. And we'll close it out, I think, with another one of Sebastian's favorites here, International Paper. They closed down. They closed at $27.78, down 30 cents.
I like to call them the true iPad killer. Who needs an iPad? We have paper. It's like that. That Come Back to Carbon Paper sketch from Live a while back. Come back to paper.
But it looks like there was some interesting, sizable put sellers on that March 19 strike in International Paper. A bulk of them, we saw over 10,000 going up on that strike over the course of the day. 6,300 went up in one go for 52 cents. And then the rest were kind of fragmented across a variety of prices, and there were some buyers in there as well. A lot of these are auto executes, so it's hard to tell exactly what they were doing on these. But it looks like a sizable amount of put sellers, at least that 6,500 in one block, in there on International Paper. These guys have earnings coming up this week too?
They do not.
So yeah, someone just thinks they've got a nice little vol level here on these March puts, and thinks the future is bright for IP and for Dunder Mifflin as well.
Mm-hmm. Totally.
Yeah, I know you're a big paper player, Mark. So I'll let you dive into this one. Then
that's why they call me Mark the Paper Trader Sebastian.
Yeah, so it's an interesting one. Like I said,
the vol was elevated. It makes sense to sell this stuff. If you don't think IP is going to drop 80 cents, which for International Paper is a monumental drop, being able to sell near 35% volatility in IP is not a bad sale relative to where it's been. They don't have the dividend anymore. They just had their dividend, so the guy could have been waiting for that. I don't know, but it's a nice little short-term sale. Makes sense if you don't think IP is going to go down. This isn't bullish. It's a not bearish play, I like to call it.
Yeah, sometimes it is just that simple. They find a nice vol level and they hit it. And there's no more parsing that needs to be done than that. And sometimes people can rip these things apart every which way but loose. But sometimes it's a good level. Why not do it there? And so that looks like this guy thinks that was a good level in IP. And we will close out the old odd block talking of the old days with paper. And then we will roll on into the future with the Express block and talk about all the fun things that we have going on online over there at Options Express.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express/Spread Block. This is the section of the show where Rob kind of takes over the show, and we sit back and we hear Rob and we listen to him and we see what new stuff, what exciting stuff, what interesting stuff is going on over at OX these days. Rob, take it away, sir.
What we've seen last week is a lot of the ETFs, the leverage ETFs, did their every few months they reset their stock value or their ETF price, and we had some big names, FAS and SKF, that they had reverse splits. And as a result, not only that, but we also had Potash doing a regular 1-to-3 split. So a lot of excitement on that front, and we always get a lot of customer calls when we have those splits, and people are confused. Well, Potash had this split, and I now have 3 options for every one that I had before, but my FAS or my FAZ didn't have the same thing happen, and the reason for that is obviously they cannot give you a fractional option, can't give you 1/5 of an option and then change the strike price. So what the OCC does is they take the deliverable amount and they divide it by the factor of the reverse split. So instead of having 100 shares, it's based on 20 shares, and the exercise value still remains the same. So that's often something that traders find confusing, and actually, compared to other corporate actions, reverse splits aren't that bad as long as you kind of understand and kind of read through the OCC memo carefully. And once you've been through a few of them, it's not all that bad. But I remember a few years ago, Transocean, they were acquiring companies and they were spinning off companies, and they had special cash disbursements, and they had, I think at one time, 4 different adjusted options on a few months, and you almost needed to be a calculus whiz to figure out what your fair value on your option is. So we've had a lot of high volume of calls on that. A lot of the commodity ETFs have been in play. Obviously, the Egypt ETF, EGPT, that's kind of come off, and now we're seeing some buying, some short covering. We had a lot of short interest in the Egypt ETF, and there was really no way to. Not aware of any Libyan ETF off the top of my head, so that one certainly got a lot of play. The oil ETFs, UCO, not only did it get a lot of play because of the people flocking to oil, but also had a reverse split. So we've had a lot of interest in the ETFs. As far as equities, it's really been a mixed bag. Surprisingly, with as much as Apple's been moving lately, we've kind of had a lower volume than usual of Apple calls. I think the Steve Jobs saga has kind of worn some traders out, and now that the price is well into the 300s, I think that some of those moves are a bit, some of those options are a bit rich, and some of those moves are a bit much for a lot of traders. So, it's traders have either some of the smaller specs have either gone to spread trading or just kind of abandoned Apple and looked for other similar stocks. Unfortunately, one of the big competitors, Google, is obviously another awfully rich stock. So we've seen some action in some of the
some
lower,
awfully rich owners.
Yeah.
Oh, yeah. I'm hilarious.
So I mean, we've been. It's kind of a week where you just take a dartboard with a bunch of ticker symbols and there hasn't been any consistency. But the ETFs are something that we've really seen a lot of people trading these days. GLD, SLV. I think I've actually taken more calls on SLV this past week than I have on GLD, which is very unusual. So that's what we've had quite a bit of at OX this last week.
Did you guys get a lot of cleaning house? We talked with Tim about this a little bit on the last show about the massive down move in Netflix. Really seemed to, I'm sure, clean out a lot of the people playing in the weekly puts down there. And it looks like Netflix is down again today. I'd imagine that you guys been getting a lot of calls on that lately, frantic margin calls maybe.
Yeah, we do. With our different. Obviously, different traders are on different margins. That happens to be one that we tend to see a lot of we don't see a lot of naked put writing, but we do see quite a few credit spreads going through. And for a while when Netflix was just kind of moving along its merry way, people were just, it was almost free money, just write a put spread, collect the premium, and write the next week. Well, last week was a prime example of why that strategy can come back to bite you very quickly if you don't work or use contingent orders or work some kind of protective order to on a put spread. Credit spreads are really great, but people tend to load up on them, and that's why you really need to use contingent orders. Stops on spreads not as much, just because some of those bid offers get pretty wide, especially near the open or the close of the day. But using a contingent, just put it at that upper strike. It's better to take your medicine and maybe get stopped out prematurely than be at max loss on 30 contracts on a Netflix spread.
Rob, one of the funniest things that I think ever happened to me, I was speaking to a group of people who were clearly newer traders, and guy raises his hand. I said, "Yes, sir." He goes, "Mark, do you prefer credit spreads or debit spreads?" And I said, "Excuse me?" He said, "Do you prefer credit spreads or debit spreads?" And, of course, I said, it doesn't really matter because they're the same thing. But anyway, just kind of anecdotally a funny thing that happened to me one time.
That really is the funniest thing that's the funniest thing that ever happened to you? Wow.
It was one of them.
I feel very bad for you right now.
From a trading standpoint, from a trading standpoint, something that wasn't morbidly funny, although that's kind of morbidly funny, was up there. Just the hilarity.
You need to cut the show early and take you to a comedy show or something, and just to improve the level of humor in your daily life.
I know.
Well,
that's what I've got Tim Navabi for, to add a little humor to my life.
Just listen to the show and listen to some of your own jokes. Those are funnier than that. Come on.
Well, I know. Well, you guys.
I wouldn't go that far. I don't know.
I'm nothing without you guys. I'm not on my own, completely unfunny. With the comedy straight man styles of Mike Tusa, Mark Longo, and the entire OX team, it's you guys with all the lobs that really helps me bounce from here to there. So
I think listening to those Oscar speeches yesterday helped you get ready for that little dialogue there.
Me and Kirk Douglas. I was actually his coach, his speech coach. So.
God. Now we're offending stroke victims all around the world.
No. I didn't mean because of, I meant the.
Which is a huge part of our audience. I think that would explain a lot.
I meant drawing it out. That's what I meant. You did a great job drawing it out.
And I think, speaking of drawing it out, I think with that we will close out the old Express block and roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is the section of the show where we discuss what's on our horizon, what's on our radar for the next few sessions. We talked a little bit in the last segment about Netflix, and I've been kind of interested in watching this whole kind of playoff with Netflix versus Amazon, and how the Amazon announcement obviously took the legs out of Netflix quite a bit. The thing's down about 30 handles from where it was when the announcement was first made, and yet it was down quite a bit again today. And yet at the same point, Amazon is following suit. It's down not as much, but it's down a significant amount as well. So it seems like there is no winner right now in this video streaming service there. Amazon can't win, and then yet it hurts Netflix at the same time. I would think that would have been a positive for Amazon to add some value added to their Prime membership, but apparently I am alone in that opinion.
No, so. They were all destroyed by the Blockbuster deal. You didn't know that?
That $300 million sealed all their fates.
Yeah.
But yeah, so we're trying to work out some interesting, maybe some spreads, something to do between Amazon and Netflix at this point, because they are moving very much in lockstep these days, and they are becoming more and more competitors these days. So it's interesting to see how their vol levels work out. We had discussed last week how some of the tail risk may or may not have been fairly priced in in Netflix weekly puts, it turned out that was the case. They were very fairly priced, and it's looking again like they are their things are pretty rich out there. So I'm sure a lot of the OX people are playing out there. But that's what we're kind of looking at right now in terms of those two. Not too many earnings on my horizon or my radar. What are you guys watching this week in terms of earnings or economic calendar or volatility levels?
Well, I'm not watching so much any earnings either, but like what we were talking about last week with natural gas at the lower levels with which it is right now, Sebastian, keep biting your lip.
I've not made that joke since the first week. I don't know if I never repeat a joke. And by that I mean I always repeat jokes, just not that one.
Yeah, but you have plenty of others that you're thinking there, I think. But
I'm doing my
anyway, with natural gas at the levels that it is, it started to bounce a little bit today. So what we're watching is to see if natural gas can bounce off of the lows with which it has, as well as some of the natural gas stocks. Now, natural gas stocks are obviously also oil stocks typically. But if natural gas can bounce off of its lows, we might still have some continuation in the energy stocks. Not necessarily crude, but if natural gas can rally, we might get a little bit of a continuation in a lot of the energy stocks that have been running. So that's what we are watching.
Sebastian, what about you?
Volatility and I don't know if you know this, but at the end of the week we've got the employment numbers. That's one of the things I'm catching. Although the market has not been moving on employment numbers.
No, it's been housing more, and housing in Libya and alternate.
Housing in Libya, but I have they are building up big expectations on this one. If you go to the economic calendar and you look at kind of what they're looking for on Friday, I think, they keep kind of every month pushing up that number, and they're looking at the briefing forecast is 220,000 non-farm private payrolls, okay, and 200,000 non-farm, and, the prior 50,000, now I know we had a big snow, but think about that. I don't know. I think we're setting up for a big miss this week, and that could be a rough one. And you can inflate the unemployment number you can deflate the unemployment number all you want, but if those non-farms don't start consistently getting over 150, 175,000, we're not going to shake this economic downturn. And this is kind of our biggest setup to fail that I've seen in a while. I don't know, Mark, what do you think?
Yeah, we've been talking about this for quite a while, off and on. What is the catalyst that will shake the bears out of their or the bulls out of their complacency and give this market maybe back to some more reasonable valuation levels? For a second there, it looked like the Middle East turmoil and the North African turmoil might be it. We seem to be weathering that storm now, unless something really erupts in Libya right now, or unless Saudi Arabia lights on fire. So yeah, maybe, of course, I guess, like you said, unless if there's a huge miss, maybe that's a little bit different. But the employment numbers, they just seem to have been shrugged off now for so long.
They have been.
And we were talking about this on the last show, actually. The people rejoicing when unemployment falls from 10% to 9.5% over the course of a year, like that's some sort of thing to celebrate. We're still at 1970s era unemployment levels, and yet we're celebrating that the beginning of the turnaround. So it is kind of I think people's frame of reference has changed.
Well, I'm telling you, we keep every month we've been kind of having expectations and missing a little bit. I think that they keep waiting for a big kind of a big number, and every month it's been kind of miss a little or make it a little. I just feel like we're set up, especially they're going to blame it on the snow, but I think we're set up for a huge
that snow
miss.
Keeps firing so many people. It's really annoying,
I think we're setting up for a huge miss.
That'd be interesting. So I thought maybe last week or 2 weeks ago, after we saw the really, really, really bad housing numbers and all the dire predictions saying we were back at 2009 levels for housing, and that we might drop another 15 to 25% in certain housing markets, that combined with the unrest in the Middle East and North Africa would be enough to unseat this market, and that's not the case. So it's going to have to be a very dire miss in order to move the needle significantly. And you're talking like, S&P back well below 1,300 and Dow well below 1,200.
I think we could miss by six figures. That's how bad I think we could miss.
So are you loading up on S&P downside ahead of this?
Let's just put it this way. I'm not keeping a major bearish VIX position right here.
Because you're such a huge VIX short. Size at 18.5 to go.
I'll never get rid of my VXX puts, but VIX, that's kind of my hedge against my VXX is I buy VXX puts because it's going to zero, and then I buy a bunch of upside VIX calls as my kind of shock hedge to protect the position. And I actually do it in kind of a diagonal time spread type of play that's been working really, really well. So that's my approach.
Intriguing, sir. And then Mr. Kurzakowski, what are you watching over at OX these days? And give us a sneak preview of the Espresso newsletter coming up for all of our listeners out there.
Tomorrow's Espresso newsletter is actually on gold. Talking about some of the factors that we talked about today with Libya and then kind of the shaky economic numbers, or some of the kind of the telling economic numbers lately, and then of course the schizophrenic currency markets of late. I still again do like gold, but just kind of tempering some of the enthusiasm, maybe doing a mini gold instead of going outright or long on the big one. And it looks like in addition to the obviously to the non-farm payroll and the ADP employment figures, looking at the ISM index and also the MBA mortgage index. Seeing how those mortgage applications are actually coming out, seeing if there's any real material change there. And of course we have the Fed's beige book, which gives kind of I actually like looking at the beige book more than the actual FOMC announcements. It kind of gives you more insight as to the thought process of the Fed, what they're actually looking at. If we see, they're very, of course, the Fed's language is very hedged, but if we start seeing that, spending may be affected, I think we're going to, I don't know how much more aggressive, the Fed can get, but I mean, I think that we could see even further expansion of the QE2, as scary as that thought is. Because the Fed is doing anything it can to actually spur the CPI and PPI figures.
I agree. That's a scary thought. I mean, how much more we're talking cuts across the board on one hand. On the other hand, we're talking, expanding QE2, and those are two interesting dichotomies to kind of to bring together and merge into some sort of political reality. I'm not sure how that works. It'd be an interesting and intricate dance to do if they did decide to go down that road. But yeah, I think that's going to do it for this episode of the Option Block. I want to thank all of my partners in crime here for coming on the show. Starting off with you, Uncle Mike, what is coming up at Know Your Options, Inc.?
Well,
wait. I believe we do have breaking news. You have discovered your Twitter handle, so let our listeners know what that is as well.
We have breaking news. We definitely discovered our Twitter handle. It is... Now I need the drum roll, please. Can I get a drum roll? Thank you. It is twitter.com/knowoptions. KNOWOPTIONS. That is the Twitter handle. So feel free to stop on by.
Now all of the listeners can follow Uncle Mike and get all of his random musings on bass fishing and salmon and the occasional ratio vertical spread in Apple.
Lovely.
What more can a man need?
Or woman.
So, there you go.
We do have a fair number of female listeners. I attribute that to myself, of course, and maybe to Mr. K as well, who is quite the sexy fellow.
Yes. But with what we have going on, we have webinars coming up Sunday night and Monday night as per usual. But the big thing that we're excited about over at Know Your Options, I'll be guest speaking at the Options Express event in Phoenix on Saturday, March 12th. So feel free to stop on by for all of you people out there in the desert. We are excited to come on out and say hello.
And then, Mr. K, what is going on at OX? How's the launch of the social going?
It's certainly picking up some interest. Again, it's the whole group thought type of thinking that it really excites a lot of traders. Anybody, especially newer traders, I'm sure we've all been there. Certainly enjoy sometimes we get too talkative about how excited we get. So it gives kind of traders a place to not only share opinions but kind of share some of their enthusiasm. So that is coming along nicely. If you've logged into your account, I'm sure you've seen the OX social tab up there. So it's actually integrated into the website. You don't have to go anywhere special to find it. Also we actually have Uncle Mike doing a webinar tonight on at OX for spread trading for sophomores. And then tomorrow we also have one of our more popular webinars, is certainly with futures traders, is the monthly futures outlook with Jim Wyckoff. He really goes in depth. That's actually back when I came over from Express Trade when we were acquired by Options Express. That was always a really popular webinar, and back then we actually had very limited technology to as far as the number of people we can have in a webinar, and his used to fill up pretty quickly. So that's always something I look forward to. But that's all we pretty much have going on in the very near term.
And then, of course, Mr. Sebastian, what do you have going on at greasymeatball.com? Oh, I mean optionpit.com. You should pick up Greasy Meatball and just have it point over. I
should. That's actually not a bad idea. I'm just afraid of what kind of traffic that would send. So, we've got our free webinar series starting on March 16th. I'm going to be speaking to the ICE on March 9th, I believe. No, not March 9th. March 8th, something like that. You can go to our website, optionpit.com/events. You can follow me on Twitter at optionpit.com. At optionpit, excuse me. The other thing I'd like to point you out is that my wife has gone commercial. Her new blog, bigblondehair.com, is a new fashion and reality show blog. And for all those interested in all that is celebrity fashion and bad reality shows, that is going to be your place to go. So check out bigblondehair.com.
I'm looking at it right now. You've got accessories, book reviews, Bottoms Up, my own personal favorite.
Oh, yeah.
My Life, Nightlife, Pets, 21 posts on reality TV. I guess she's been going for quite a while. Quite the reality TV fan.
She moved over. She was doing it just at Blogspot. I finally went out and bought we finally went out and bought bigblondehair.com and decided to migrate into a real website. So, kind of exciting.
Got to keep the wife busy, otherwise it just leads to havoc on the home front. This is interesting. I'll have to check this out.
All right,
maybe we can get you some ad dollars for this. People come to me all the time and say, can we buy space for our targeted options audience as well as the reality TV show / blonde blogging audience? So there's a lot of crossover there. I think I can get you some revenue.
Oh yeah, absolutely.
Huge crossover.
All right.
All right, and with that, we're going to close out this episode of the Option Block. I want to thank all of our listeners for downloading and subscribing and streaming the show. And we will see you next time here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.